You're listening to Indications by the Conference Board.
Hello, my name is Ataman Ozyildirim, Senior Director for Economic Research at the Conference Board. And it is a pleasure to welcome you to this edition of the Indications podcast. It's a series brought to you by the Conference Board. Today, I'll be sitting down with our colleagues in the US, in New York, and also north of the border in Canada to discuss 5 new trends in global value chains and how global and Canadian companies are viewing these trends based on a recent survey conducted by our organizations. The trends are about the future of global value chains. We will, of course, be talking about the impact of the global pandemic on supply chains, and we'll be discussing insights for what's ahead. We recently published 2 reports on these topics from a global as well as a Canadian perspective, and you'll be able to download these reports after the podcast. So today, I'm joined by Swapna Nair, Senior Economist and Global Commerce Center Lead from the Conference Board of Canada. Welcome, Swapna.
Thank you, Ataman. Thanks so much for having me here today.
Great to have you on the podcast. And also, we're joined by Erik Lundh, Principal Economist from the Conference Board here in New York. Welcome, Erik.
Great to be here.
Together, we'll be taking a look at how global supply chains will change in the year ahead. How will changes in the supply chains impact the global economy? And what is the relationship between supply chain agility, resilience, and sustainability? The first trend we've identified in our reports is that supply chain agility and resilience are inseparable from the drive for sustainability. Sustainable supply chain practices can help companies to manage their business risks, enhance brand reputation, and manage suppliers more effectively. So my first question is to Swapna. How do companies think about these linkages between supply chains and sustainability, also from the perspective of Canadian companies?
So the link between sustainable supply chain practices and these outcomes has become more critical given the vulnerabilities in the global economy as revealed by the pandemic. Our research does find that sustainability, agility, and flexibility are very much on the minds of Canadian businesses as they look to redesign their supply chains in future. Digital tools, for instance, can help create more visibility of operational practices and associated risks and improve their management.
So it's a much more holistic view of supply chains. Erik, you've spent some time looking at the data on global trade and thinking about location decisions that multinational businesses take. Tell us about the second important trend that we've identified.
Of course. So the second trend we've identified is about localization tendencies, which are sometimes called reshoring or onshoring or going local. Based on recent data on global intermediate input flows and production distribution trends, we believe that global production networks will remain a dominant feature of supply chains in the future, but localization may increase as well. We argue that the current globalization era is not over, but real policy risks and uncertainty could force greater localization of production networks in the future. Globalization has faced popular backlash in recent years. Recent globalization discussions are also fueled by government intervention to incentivize or mandate the reshoring of the production of goods and services. And this is particularly the case for national security or public health reasons. We believe that following the pandemic, that this trend will continue at least into the medium term.
Thank you, Erik. And Swapna, what about the Canadian perspective on globalization and deglobalization concerns?
So, in terms of concerns around globalization, Canadian businesses are not very different from American or global businesses. And there's definitely that move towards reshoring and nearshoring by shortening the geographical distribution of supply chains or bringing it closer. That said, I just think we are in a new phase of globalization. A large extent of globalization today is the cross-border movement of services and data, and therefore is less visible as against movement of goods. So, my perspective on that is that the discussions around deglobalization are partly hyped.
That's a good point. And of course, China has been the Chinese economy has been a big feature of globalization in the last decades. The next trend that we were identifying was looking at the role of China in the global economy. So we'll first go to Erik and then Swapna about how multinationals are viewing supply chains that involve production in China.
So China has been a premier global manufacturing location for many industries for decades at this point. However, given some of the points that have been noted earlier, many companies are increasingly considering either diversifying production uh, or sourcing out of China. We make the argument that this is going to be quite difficult. In other words, China will remain one of the main manufacturing hubs of the global economy in the future. A lot of this has to do with the sheer size of China's manufacturing base. It's immense. While the US and Europe also have robust manufacturing bases of their own, labor costs are a lot higher that make manufacturing in these economies a little bit uncompetitive relative to China. Some analysts and authors write that Southeast Asia could potentially rival China in the future as a manufacturing location. But according to the data that we've compiled and reviewed, the supporting industries, again, that manufacturing base, just isn't there yet. Thus, there's really not enough scale in terms of local sourcing in Southeast Asia to support a large shift of manufacturing from China to that region. This could occur potentially in the future, but for the time being, China is very much going to stay at the center of global manufacturing.
Indeed, and when we look at Canadian companies, obviously there are a lot of similarities between the U.S. and Canadian economies, but there are also some very different and distinct features. So we'll go to Swapna to comment about how Canadian companies view their production location decisions, especially with regards to the Chinese economy.
So for Canada, China is the third largest trading partner after the US and European Union. And Chinese imports, or Canada's imports from China are focused on machinery and electrical imports, and many critical inputs come from there. So all of what Erik just mentioned is relevant for Canadian businesses as well. China is a key supplier, critical inputs, but that said, businesses would like to move away from China as a production location in the near to long term future. And some of our survey indicates this as well. But this in turn would depend on cost and capacity constraints and could lead to pressures in the midterm.
Interesting. It really is about long-term strategic decisions that these companies are looking at and new thinking about efficiency and resilience that's coming to light. Also, in light of what we have been experiencing in terms of the global pandemic. So we're going to take a short break for some quick announcements. And we'll be back in just a minute to continue this conversation with Swapna Nair and Erik Lundh, economists at the Conference Board and Conference Board of Canada, where we're discussing the latest global supply chain trends.
Interested in this content? You can find this and much more at our Conference Board website, www.conference-board.org. Or, even better, contact our membership team and your company can enjoy the benefits of our in-depth research around the economy, environmental, social, and governance issues, public policy, marketing and communications, and human capital. As a member of the Conference Board, you will be able to have full access to all of our cutting-edge research, leading indicators, benchmarking, and data services, in addition to webcasts and podcasts such as the one you are enjoying now.
Welcome back. I'm Ataman Ozyildirim at the Conference Board, and you're listening to the Indications podcast, a series brought to you by the Conference Board. Today, I'm speaking with my colleagues at Conference Board of Canada, economist Swapna Nair, and at the Conference Board in New York, Erik Lundh, about global supply chains. So we've identified a fourth trend about the role of services trade in globalization. And we find that globalization is going to be affected to a greater degree by services trade going ahead in the next decade or so, rather than goods trade globalization, which we've seen recently. Services such as IT, business and financial services, and R&D will become increasingly globalized, creating new opportunities. Global competition will increase for business and financial services and potentially for new consumer categories, which might include things like telemedicine or digital diagnostics. It's not clear which markets will become the next global hub for services, as we've seen with manufacturing hubs in China. The US is the leader in the export of services, particularly business and financial services. But fast growth in other markets, such as China, India, or Ireland, may challenge US dominance. Over the next decade, high skilled workers in emerging markets will compete with their peers in mature economies. This is a new labor market, a new global labor market, and this opens up new opportunities to source talent globally. So, Swapna, if we go to you to comment on Canadian companies and how they're looking at the trade in services and how they source their business and professional services globally, what do you say?
So we, the Global Commerce Center, recently did some research on digital trade and how the Canadian economy is performing in this area. We find that there is strong growth in digital trade, both imports and exports for Canada, including trade and services and e-commerce, both domestically and cross-border. So there is definitely an opportunity for Canadian businesses, both small and big, to take advantage of these trends. And there is an increased awareness among businesses around this. For instance, think of the Canadian business Shopify and its investments in e-commerce in India, for instance. And many of the smaller businesses are using these digital intermediary platforms, whether it's to digitally transact or trade in digital services, such as professional services, health, and education. So yes, definitely looking to take advantage. The pace is slow currently, but we will see a lot of momentum in this area for sure as we move ahead.
Clearly, it's a new phenomenon that is global, affecting many large economies. Our last trend is about the macroeconomic costs of the changes to supply chains when we look at the longer run. Specifically, in our report, we found that more localization of supply chains, more local production could add to inflation in the next decade. We have already seen that supply chain disruptions have led to higher producer prices because of those bottlenecks. This is generally a short-term issue that's due to supply-demand mismatches. However, we found that major restructuring of supply chains and localization of production could add to inflationary pressures for the long term in the next decade. So, Erik, you've also been looking at this question. Can you talk a little bit about a simulation exercise that we did on the impact of localization on prices in the long run?
So we ran a simulation through some models of ours over a 10-year period for both the United States and for Germany, in which large-scale localization of production occurred. What we did basically was we slowed import growth over this 10-year period and increased domestic production to offset it. Both countries witnessed an uptick in inflation as a result due to expensive labor from local manufacturers offsetting or taking the place, rather, of cheaper, less expensive labor overseas. The inflation trend was especially acute in Germany as opposed to the US due to the higher trade dependency that the German economy faces. Thus, businesses should prepare for more elevated inflation if deglobalization intensifies. This could bring greater pricing power and higher profit margins, but also may lead to shifts in consumer spending patterns towards necessities. So, businesses should consider contingencies to manage inflation risks for input costs, including materials and wages.
So, globalization and the development of these global supply chains have created efficiencies and lower costs for companies and consumers around the world. But if they are reversed, more reshoring or onshoring could actually come with higher costs that we need to consider in the long term. So, that's an additional complication about global supply chain changes, redesigns, and not in the short term, but also for the decade ahead. So thank you very much, Swapna and Erik, for taking us through some of these latest developments and new trends in global supply chains. And thank you for listening to this episode of Indications on 5 trends for the future of global supply chains. If you would like to go deeper or check out the data for yourself, please visit our website. The link will be available from the show notes. I'm Ataman Ozyildirim, and you have been listening to Indications, a podcast brought to you by the Conference Board.
This has been Indications from the Conference Board.